Welcome back to Yahoo Finance Live. This morning we got the update from the Department of Labor there on the unemployment front, with applications for unemployment benefits surging in the latest clip, topping estimates to come in at the largest total that we've seen since September. The total came in at jumped by 137,000 claims up to 853,000 last week. That was well above the 725,000 economists were expecting. So let's break down that report and what it means here about the recovery with our next guest. Daniel Morris is BNP Paribas Chief Market Strategist and Investment Insight Center co-head, and he joins us now here on the phone. Daniel, appreciate you taking the time to chat here. I mean, anytime we get these upticks, there's a lot of thinking around why we're seeing it move in the opposite direction that a lot of people want to see. So what do you make of the latest report, and what does it say to you about the recovery?
Well, to be honest, I'm a bit surprised that the economists were surprised. I mean, you know, and we've had for a couple of weeks now, deteriorating figures on the pandemic front, rise in infections and also fatalities, hospital utilization, et cetera. So it was inevitable that states and cities were going to start imposing restrictions to try to contain that, and that's going to have an economic impact, particularly when you think about the most sensitive sectors, anything around leisure, restaurants, and so on. So I think would pretty quickly expect to see that feed through to the jobless claim. So for us, it's something we've been anticipating. We think similarly, we're going to see a dip in the PMIs for the month of December, because essentially you can imagine the U.S. being a month or so behind Europe. And that's essentially the pattern that we're seeing here. I'm speaking from London. So we anticipate that. We think it's going to be a challenging couple months. But at the same time, I think what we're focused on and the market's focused on is the arrival of the vaccines, which we all anticipate will pick up into the spring.
Having said that, Daniel, we haven't seen a whole lot of this disappointment reflected in the market action today, although we are seeing the Dow, the only one in negative territory right now. We've heard from so many analysts who've come on the show who say this isn't about what's playing out right now. We're looking 6 months ahead. Does that growth story still remain intact? Or with every week in the new economic data we've gotten more recently, does that suggest to more pain than initially thought even a few months ago?
Well, I think the other thing you have to keep in mind, even if the figures do deteriorate, even if the kind of soft lockdown restrictions increase, and then you have a bigger negative economic impact, what really matters is what measures are taken to compensate for that. I mean, even if you think back to the second quarter and the huge drop in GDP, I mean, a lot of that decline was compensated by the CARES package. I mean, you had over $2 trillion package that replaced a lot of the lost income that resulted from the recession, people getting laid off and furloughed. And if you look at personal incomes in aggregate, they're actually higher now than they were in December. So yes, it's bad in terms of near-term domestic consumption. It's bad in terms of near-term business revenues. But to the degree we do have a second stimulus package, which we're still counting on, a lot of that loss is going to be made up. And again, I think that's what the market's keeping in mind, not only the arrival of the vaccines and things starting to return to normal, but in a sense, those losses won't be materialized because we're just going to borrow some money and plug the holes.
I mean, we saw markets react to those stimulus talks earlier on this year, kind of the hopes. The big debate was whether or not those hopes were baked in. As we approach it, it sounds like Treasury Secretary Steven Mnuchin's more optimistic about progress being made there, saying he's talking to senators on both sides of the aisle. But we still haven't necessarily seen a lot of the talk from the top Democrats there in terms of Speaker of the House Nancy Pelosi. And there are two plans, right? We've been talking about that $908 billion bipartisan plan, and the other one now being pushed through here by Secretary Mnuchin. So talk to me about what expectations are baked in your mind here if we are going to see a deal come through here before the end of the year to maybe address some of those consumer concerns.
Well, exactly. So our expectation is that it's going to be closer to 500, and that's on the assumption that the Republicans retain control of the Senate, and that it's actually not going to be passed until we get the new Congress. So that, I think, is hopefully a fairly modest set of expectations, and we think that's more or less what the market's operating under. So then you think of the upside or downside surprises on that. So if it's 900, clearly upside surprise. If it's sooner rather than later, that's good. Conversely, if we end up getting nothing or much much less, the market certainly wouldn't be happy. But it's also conceivable, at least, that once we get to February, and if we're past the worst of this in terms of the lockdown restrictions, the economy may not be looking so bad at that point. And if you did get a somewhat smaller stimulus package, the markets might look even past that and to say, well, we're recovering already. There's not so many holes to fill. So I think for the most part, most of the scenarios do show at least stability in the markets, if not upside surprise, but always there's that potential that in the end you really are disappointed.
Daniel, you've got a pretty diversified portfolio looking by region here, overweight US, Japan, EM, Europe as well. What are some of the themes that you're buying into right now that you think investors should look to for opportunity?
Well, I think we got to appreciate that we're still, relatively speaking, in the early stages of the recovery, coming out of the recession. So you want to think cyclicals at this point. So we're looking at those markets that we feel have the biggest potential to take advantage of that trend. So hence the preference for emerging markets. We do think in the U.S. with the stimulus package, also just think about the flexibility of the U.S. economy in a way that you don't see so much in Europe, frankly. You know, as we reconfigure for the post-coronavirus landscape, there's going to be a lot of opportunity in that, and we think the U.S. economy is going to be able to take advantage of it, so that explains the U.S. overweight. And then at the same time, looking at value plays, and we're all appreciating the rotation that's been taking place over the last several weeks. We think that also has still some room to grow, so Japan is also a market that would benefit under that scenario.
All right, Daniel Morris, BNP Paribas Chief Market Strategist.